Big Oil reporting earnings this week. Energy contributor Dan Dicker joins me. Dan, BP was a bit of a disaster. Is it going to be that sloppy for the rest of the majors?
Well, first of all, let's break down the BP earnings just a little bit because we want to get inside that. It looked really, really bad. You're right about that. There was a huge write-down on Libyan assets, which I think caught a lot of the analysts, including me, by surprise. Makes the numbers look a lot worse than they actually are. In general, the BP numbers are what everybody expected outside of those Libyan write-downs, and that means that there were two sections, upstream and downstream. Upstream did very poorly, and downstream did very well. And that's really what we're looking for.
So is that what we'll see, really, that same pattern for Exxon and Chevron and ConocoPhillips?
Indeed. As everybody reports, if there's going to be a surprise, it won't be in how bad upstream is done. That means production, for example, and what you realize for your crude oil barrels. But it will be what downstream is doing, and whether the refining assets and the transport assets and the chemical assets and the liquid assets will make up for what's been going on, what's really been going on badly in the upstream sector.
So how do these companies get around these low oil prices? Obviously out of their control. What can they do in terms of protecting themselves a little bit, and do something for their shareholders? Right,
and they don't get out of the way of low oil prices for the most part. Low oil prices bury them as they bury all independents, services companies, offshore drillers, everybody. To a certain degree, they can't get away from those. But in terms of cost cutting, you know, BP, for example, showed a very good increase in efficiencies and cost cutting. You'll see those same kinds of alterations go on inside the reports for the majors. But in essence, none of those things will really matter until we get a turnaround in the oil price, and that's what everybody is waiting for.
What about more restructuring or some, trimming around the edges a little bit?
Some of the companies do have the ability to sell, but for the most part, they're acquirers, and they're not sellers, and they're not looking to sell. I would say BP, for example, has sold a little bit of asset, but they've been under the gun from Deepwater Horizon since 2010, have been forced to continually sell assets. From the big majors, Exxon, Chevron, Conoco, you won't see that kind of restructuring. In fact, I'm looking for them to buy. They're in the place right now, particularly Exxon. They have a lot of cash on hand. We have a lot of independent oil companies which have really hit the skids and represent real values to me. The next move I see from the majors that makes sense are actually acquiring, not getting rid of assets.
How about on the dividend side?
Again, these are things that are protectable. For example, BP, again, selling assets to protect the dividend. Part of the reason that I like companies like BP, or at least a little bit, I like BP and I like Total particularly, is because they have the capability with cash flow to protect that dividend. That dividend is safe. You can use it as a sort of a bond play to get into when really the rest of the oil sector is no place you want to be.
Although I wonder, once these numbers come out, if there is anything to turn around the stock declines in these companies.
In the end, there's things that you can look for, little guidelines on whether things are turning around for the majors in terms of the way they're operating the business. But as the oil price goes, these stocks go, and as long as oil is under pressure, these are not places you want to be invested in for the most part.
Dan Dicker, good to talk to you. Thanks.
Thanks, Rhonda.
I'm Rhonda Schaffler for TheStreet.